All right, here we go again. Back to work we go, guys. Hope you had a fantastic day. Hope you made some money on those beautiful ranges we saw across all three of these markets here today. I'll tell you, speaking of ranges, anytime we see a tight, narrow range like that today, usually the following day is ripe with some nice, juicy breakouts. So very excited for Thursday's trading session. And as always, I'm going to cover all my favorite trades in tonight's video that we're going to game plan to make some money tomorrow. Before we jump in and get our hands dirty on these charts, make sure you subscribe to our channel that we don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor. As always, I appreciate you guys tuning in. Hit that like button. Drop me a shout out in the comment section. Thanks so much for tuning in and supporting this YouTube channel. But enough of the intro, right? Thursday is right around the corner. And I'll tell you, like I mentioned before, usually we see some of these tight, narrow ranges the following day usually creates quite a big opportunity for some big breakouts, maybe some reversals, maybe some fake out breakouts. We have a lot of great trades we're going to talk about on the video tonight. Everything is range bound. You can see range on the S&P, range on the Nasdaq, range on the crude oil, and everything for the most part is pretty bearish still, right? Buyers do not have any control of this whatsoever, right? Bear market, right? Ever since we heard from Powell on Tuesday morning. We know we're overall bearish right now, but I'll tell you, you will see tonight, there's a lot of potential here right now for a relatively strong breakout. We've got the S&P rotating up off of the lows. The Nasdaq failed its rotation as it rotates back higher. And Oil has a beautiful, what we call a pop and grind channel sitting at major support down here. So, but I'll tell you, again, we're definitely looking to short the bounces like we talked about in last night's video. But I'll tell you, if you're wise with this, there definitely are some ways to make money on the long side here in the short term. And so we'll definitely talk about both the long side trades. There's a couple of easy ways to make money going long. Also, to, of course, some short side trades because, of course, as always, right, this is a bear market here at this time. Now, before we jump in and go into each of my favorite trades for tomorrow, let's all get on the same page because tomorrow, it is a pretty wide open day. Tomorrow's kind of the one of the only wide open days we have here the next few weeks because, of course, we get that non-farm payroll number coming on Friday. We have that CPI number coming next Tuesday. We've got rollover and quad witching next Friday. So we definitely are excited for tomorrow in our trade room because, again, kind of a wide open day. The only big news you have tomorrow is you've got Michael Barr speaking. He's going to be speaking at 10 o'clock Eastern time tomorrow. We've seen a lot of action at 10 o'clock Eastern time this week, and so we'll definitely be watching that top of the hour. We call it the 10 o'clock shock in our trade room. So if you could only be at your desk for an hour tomorrow, you don't want to miss that 10 o'clock to 11 o'clock block of time tomorrow morning, especially in our trade room with all the advanced members. One thing I should also mention is that next week, there will be no video newsletters. Next week, we'll have the week off for quad witching, get rested, refreshed, and we'll come back the week of the 20th of March. So just be aware of that, right? Tomorrow morning, Michael Barr, 10 o'clock Eastern time. We'll definitely be listening in, him as a catalyst tomorrow morning in our trade room. And then keep in mind, next week, no video newsletters next week. It's known as quad witching week, a bit of a spring break from our YouTube channel next week. So keep that on your radar for next week. We're going to make the most of the rest of the week, though, this week. Back to our charts, though, guys. Obviously, the news, right? News tomorrow, that speech from Barr tomorrow is a great catalyst, but we make our money by trading off these charts. And I'm going to go over each one of these charts tonight and talk about my favorite trades on Emini, Nasdaq, and crude oil. If you like making money, I would definitely recommend watch this video all the way through to the end because every trade I talk about can be applied to your favorite market. So don't just click off after your favorite chart is done. I'm gonna wrap it all together and you'll see ways to make money on whichever one of these markets is your favorite. So I'll give you a reason to stick around all the way to the end. Let's go to the S&P first. We'll go Nasdaq and we'll wrap things up on the crude oil. A couple things here. First of all of these charts are tick charts here tonight. This is a 10,000 tick chart here on the E-mini S&P. This yellow line is the 21 EMA. It's not the only indicator that I use, but it's one of the most important that I use here. And then, as always, down in the description of the YouTube video tonight, I'm going to drop some links for some higher time frame charts to give you a bit of a bigger picture look and tip you kind of off to how I'm looking at these markets in a bit of a bigger picture. You'll find 60-minute time frames and 4-hour time frames linked up in the description of the YouTube video. So if you want to get a bigger picture, more of a lens I'm looking at these markets through, you definitely want to check out those links down in the description. With that said, what's the most important factor affecting this market right now? Like I said earlier, we're very bearish, right? We're very bearish here, and we're into a trading range. Now, ranges love to rotate, okay? The way that ranges work, they're balanced markets. Ranges love to rotate. They rotate down, up, and now you'll notice they're trying to finish off their rotation going higher. We oftentimes see rotation back and forth from the top to bottom of an expanding triangle or a megaphone pattern, as we call it in our trade room. And we oftentimes get the amount below the range, or it can be equal or symmetrical to the amount above the range. So we have to think here, there's going to be quite a few bears up here looking for shorts back down. I'll tell you though, as these triangles get wider, as these things start to get wider, that momentum begins to build. And we have yet to see a really deep pullback yet this week after that really big monster move we saw after Powell. This is why I say I think the buyers have a couple chances here right now to pick something off as it runs higher. We definitely anticipate there'll be some buying opportunities as we go higher, and then as we run into more sellers overhead looking for those reversals back down into that trading range. And this is pretty consistent on both the S&P and the Nasdaq. The Nasdaq actually is even more bullish. We'll talk more about the Nasdaq in a moment, but you'll notice if you understand how rotation works, we're rotating back and forth. They actually failed their rotation on the Nasdaq, but the Nasdaq looks very, very likely for a bit of a larger breakout going higher. So we'll definitely talk more about that in a moment. What are my favorite trades here on the S&P and ultimately the Nasdaq? There are ultimately two ways to buy this market as it runs higher. One of my favorite ways to buy these rotations off the low, as we call it, is to use what's called a trap setup or a bear trap. As we're going higher, anticipating bears are waiting for a higher price, what we can do is start picking off bear traps. Look for entries off the lows or just below prior lows with the same entry patterns you guys learn in the free trading course. What I'd love to do is go out and find some channels and go looking for these bear traps. Now, keep in mind, you're going to want to get into these early in the move right now because, of course, the higher we go higher, the more bears we have to assume are there. So as the market begins to rotate off of this low and become more attractive for sellers, we definitely anticipate there to be some bear traps as traders get a little bit too aggressive, settling too low here. I like that way to buy it on the way higher. I also think too, and this seems to be the less likely scenario because of just the overall bearishness here right now. But let's say, for example, we pop up and we anticipate a lot of bears up here, but those bears are nowhere to be found. Crazy things happen in these markets right now. Who knows, right? Let's say we pop up, and let's say now that instead of seeing bears up here, they walk away. And now what usually happens on these is, again, with that rotation off the low, again, we're anticipating bears waiting up here. But if some reason they start to grind and grind and grind, this is usually a giveaway that for whatever reason, the bears are waiting to sell at a much higher price. And if we get one of these pop and grinds, right, these pop and grinds going higher here, I can now draw a trend line off that high. I can connect it off of that low. And I'll tell you, even though we're a pretty bear market overall, with all of this bullish momentum as it rotates off the low, there's usually some pretty easy money to be made right below some prior swings with things like a bear trap. As I mentioned before, we may get underneath the moving average, get some bears coming in, trying to short this thing back down, trap then in. Remember, anytime we have a very strong pop and grind, the buyers are going to want to buy that that dip and retest that high. And so again, I can use things like trap entries below prior swings. I can rope in the bears underneath the moving average and buy into their stops with failure patterns. So I like that. Again, this doesn't seem to be as likely as the short-term traps going higher right now, right? Because obviously we expect there to be a lot of bears up there. But if we do get that situation where it pops up and begins to grind going higher here, I definitely like those, again, traps, failures, just like you guys are learning in that free trading course. Now, let's talk about the sell side on this, right? Because obviously as we go higher, we do anticipate the bears to be up here and short the bounces. As we go higher, what's the biggest challenge? It's going to be quite bullish in the short-term momentum. I'm a short-term trader. I'm not a long-term trader. I'm sure many of you guys are longer-term traders. I'm sure there will be sellers who are selling into this move right now. I have to assume there are bears waiting up there. That's not really my style. My style to be a seller is to ultimately try to, well, for example, as the market rolls higher and we take out some of these key levels of resistance, that momentum now becomes pretty bullish. So I have a hard time picking that top, right? I can't just sell into it because oftentimes it'll keep on going. It can be a very easy way to lose a lot of money in a short period of time. What I'd rather do is see if I can get some of these buyers trapped in and use their stops as fuel. This is where momentum comes into play. Again, we're anticipating up here levels of resistance. And remember, if it does pop and keep grinding, right, then we start looking for that channel and buy that pullback, right? So keep in mind the differences in this. But if we start running into overhead resistance, we now see the buyers aren't getting anywhere fast. It's an overall bear market. That range below me is a magnet. And now what I want to do is, because we have that bullish momentum coming off of that low. Again, I'm a short-term trader, so I want to go with that short-term momentum. Because that momentum is so bullish, I need some other catalyst to help the market reverse, and that's where a stop run comes in, right? This is why I love to use what I call two-try failure patterns, just like you guys are learning in our free trading course, right? So we go up, we run into resistance. The buyers are trying to buy into it. They're trying, but there's so many bears up here. Again, a lot of bullish momentum. So what do? We let the buyers once, let those buyers try twice, and we literally sell right into those stop losses for that run back down using those same entry patterns, right? That failure pattern. Now remember, where does the market want to go at that point? If it holds that high right now, where does it want to go? It's going to want to rotate all the way back down, right? Because that's the way that's the way ranges work. So can I make money going lower? Absolutely we can. The key is as we drop off that high, simply look left, find a new trend line off that low, bring it up around the high. See what I'm doing here? That will give you a channel. And then as we always say, you want the first test, the first short, off the high of that channel. And this could be a bull trap, like I'm showing right here. It could be a buyer failure pattern, just like you guys are learning and seeing lots of examples in the free trading course. Which reminds me, I know that most of you guys and gals have taken the free classes. You've learned things like the failure patterns, the breakout pattern, right? The popping grinds, the bull traps. But listen, if you're here for the first time right now, if you haven't learned all these entry tactics, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link. Take the free trading course on our website, because I'll tell you, the strategy that you'll learn in that free video series will teach you a stupidly simple trick to know exactly where the best winning trades will be each morning, and I'll make it easy for you to start making money each day consistently with my 4 favorite entry patterns. If you're like me and you can't stand missing the best trades each day, if you're not getting the results you want, definitely grab that link, take that free trading course. It is perfect for someone trying to make a career out of trading, someone trying to add another income stream in these markets. And in that, you'll learn all about things like these bear traps on the way higher, right? Timing 1, 2, and then the short back down again. Now, a couple variations I want to go over. I also want to talk about the break lower here, right? Because as you can imagine, if we can short this thing off the high, we can definitely buy off of the low. We're going to talk about the buy off the low. And hello, it's an overall bear market. We'll definitely talk about a breakout going lower as well. So we have a lot more scenarios to review here for tomorrow. Now, keep in mind, too, we may end up popping up. We may end up pulling back to the moving average. The buyers may not try once, try twice, and then fail, right? They may pull back and they may retest that high. This is perfectly fine. This is not a breakout. It's not a reversal. Remember, the only way it really breaks or reverses like this or becomes a more of a long-term bull trend is if they hold that pullback and blast, right? They really have to hold it and blast. If they do, if they run this thing up, if they pull back to that moving average, they pull back and jump off that moving average. Again, it's kind of like that pop and grind that I mentioned earlier. But in this scenario, if they pull back and blast, now that becomes a bull trend now, right? Now we've ripped free of that trading range. It's possible tomorrow. The buyers, of course, will need to really show us they want this. And the bears, we expect are waiting up there. But if they can hold that high, right, and break out, now I can find that new channel. I can drill down, find those traps, right? Find those pullbacks, find those failures off the low of that channel. Remember, we're not buying that first pullback. They have to hold that pullback and really blast, right? It has to be a very strong rip, right? Because we have to assume, again, there are lots of bears waiting up there in this overall bear market. But let's back it up though, right? Back it up. Let's say though we go up. Let's say the buyers try to break it out, but they don't blast, right? They don't blast through it. They don't get a full reversal. All they do is retest the high. Remember, anytime we see a strong move in one direction, we expect a retest of that high. And so once the buyers begin taking their profit at that high, we can then begin to rope in some of these rookie buyers, let them try a couple times. This is a slight variation of those two try failures we talked about earlier. I call these double top reversals. It's a pretty simple idea, right? Once they retest the high, buyers are taking profit. Bears, of course, will come in and sell into it. As a short-term trader, I want to use the buyer's stop losses, right? I want to use their stops as fuel, as we always say in these videos, almost spelt it F-U-L-E like before, right? Stops as fuel and run those stops going lower. And again, as it drops back down, we can now go out, find that new channel, right? And go hit it off the high there. That's another variation of that short. Again, knowing that, right, as we go higher, lots of resistance up overhead here. That's the way we want to look for another variation of it. And as I always say too, in these really big bear markets right now, we may go up and there may be so many bears up there. We may not get one, two back down, right? It may get crushed and just rip right back down again. These are always a little bit disappointing, a little bit frustrating because, again, I'm sure there are going to be a lot of big lot sellers who are selling into this move right now. I can't imagine they won't be. And so it might just simply take this thing and rip it right back down again. If they do run up and V-top off of that high, I know these are frustrating. The most important thing you don't want to do, though, is you don't want to chase it going lower. You want to stay patient, sell as high as you can, draw that channel off the low, find that pop and grind, right? That's the same idea, right? We pop up and grind higher, we draw that channel like that, right? We pop down and grind lower, we draw the channel off of the lows. The most important thing is to look left and go find some of these prior swings. Swings are where traps live, right? Get above the 21 moving average. That's where failures live. Again, any of the entry patterns you guys are learning in the free trading course can be ways to sell off the high of that channel. And again, we know where the market wants to go, right? It wants to rotate back and forth from there. So those are, we've covered a lot, right? The breakouts, the bear traps going higher, and those beautiful, hopefully beautiful reversals off the high here as well. We'll definitely be looking forward to using that tomorrow morning in our trade room. Next up here, I want to talk about as we go lower. If we go lower, in all reality, we may not be able to get that move going lower because of this rotation off the low. But let's say here we do end up back at those lows. How do I buy off the low? How do I sell that breakdown? Let's talk about that because that's definitely going to be something we better be prepared for here for tomorrow. Now, over on the Nasdaq chart here tonight, you'll see the Nasdaq, as I mentioned before, before, the Nasdaq looks a hell of a lot more potentially bullish than the S&P does. A lot of this is because, again, we have failed rotation. So as I mentioned on the S&P, we're definitely overall bearish. There's no doubt about that. We basically went into a trading range here for most of the day here today. But if you understand how ranges work, if you know how ranges work, right? We had that beautiful rotation down. They finished off the rotation higher. We should be trying to rotate down around those lows, right? That's the way ranges, especially bearish ranges, should be working. As you can see, though, yeah, it didn't happen that way, right? That failed rotation. Now, keep in mind, we haven't seen, like I mentioned earlier, we have not seen that deep pullback we were hoping for in last night's video. This could easily be slow walking its way higher right into a bull trap up above these highs. And so we definitely have to expect that as this market tries to rotate higher right now, there definitely will be bears waiting here. But I'll tell you, in situations like this, though, we oftentimes do get some short-term buying opportunities as we try to, for example, the amount we break, the breakout leg right here oftentimes will be a measuring leg. And so you definitely have your eyes on that 12,320 area on the Nasdaq. And if the buyers get what they want tomorrow, they'll end up going all the way back up to that 12,360 level. That would be kind of the probably maybe a dream come true target, but a very good objective there for those buyers here for tomorrow. So again, everything we talked about on the S&P before, right? As we go higher, looking for those bear traps on the way up. Again, if we pop up and begin to grind, that becomes a pop and grind channel. Looking for that first test is the best test off of that low. So same basic idea here on the Nasdaq as we had on the S&P. And again, as we go higher, we're not a bull market, right? We're overall bearish right now. So as we go higher, if these buyers begin to struggle and show signs of exhaustion, you know that bears like myself, right? Short-term sellers, again, we expect there will be bears selling into this, right? Longer-term bears. But short-term sellers will wait for these buyers going to dig their own grave, right? Wrap that noose around their neck and will use those stops as fuel for that run back down. Now, be aware, there is a trend line coming up off of this low, so you'll want to make sure you pick your spots wisely. If we do end up grabbing that channel, we'll want to make sure that channel test is a good distance away from that trend line. You know, it's not far-fetched to think that we may end up going up, trap those buyers in, use their stops as fuel. The market may easily tumble back down again, and then guess what? Running right into that area of support, we either break out, pull back, and keep going, or what might happen is, just as we saw today, we may end up pulling back bears, of course, trying a couple times here to short this thing going lower. You can see example of that right here, right? They run lower, the bears try once, the bears try twice, and it punches back up. We may end up seeing something like a bear trap into the low of that channel. Again, remember, we want to make sure we use those stops as fuel, right? Because again, it is going to be overall bearish at that time. So I like that strategy here as we go higher. And again, I think there are some short-term opportunities here for the buyers here on the way higher before we get too high up there to get too many bears in the market. Now, if we can make our way back lower again, let's say, for example, we go up, right, and the market just simply gets crushed and heads back down again. How do we buy it down here? Is there an easy way to buy it off that low? There definitely is, and we can see a great example of that entry pattern right here. If we end up rotating off that high and go all the way back down to that low, take out some of these big lows down here, it's a great place to be a buyer because we're sitting at major support below a trading range. But what's the problem, though? Yeah, the problem is momentum, not just long-term, but also short-term momentum, right? It's short-term, very bearish. And so the best way you want to kind of time the entry on this, again, I mentioned this on the left-hand side, is you want to use that two-try failure, but you really want to, because you're going against that overall bear momentum right now, you want to try to use what we call a crown reversal. And a crown reversal is nothing more then a 2-try failure with a trap set up right below that low. So imagine now we take out one of these lows. This could be anywhere really down here at all, right? But once we get down into those lows here, now the bears come in. Horrible place to be selling. Can we all agree on that, right? Yeah, horrible place to be selling down there. We don't want to sell at support below the range. We want to be a buyer down there. And to be a buyer, we have to rope in those sellers and use their exits as the catalyst to go back higher. Once those bears try a couple times, and the reason, basically, once those bears try a couple times, we now know where their pain is. We now know where their stops are, right? In this situation, if we can buy into the stops of sellers, the sellers, of course, now get bounced out. They become buyers. Buyers are buying. Sellers are buying. Everybody's buying off that low. Now, the reason why you want a trap entry on this is because you have to always be worried about, in an overall bear market like this, you have to always be worried there's going to be some channel coming down and there'll be some bear, right, sitting up there just to eat your lunch, right, and run it back down. Because again, it's not a bull market, it's an overall bear market. This is the reason why you need to buy as low as possible whenever you're trying to pick a bottom in a bear market like this. I call these crown reversals. They're very, very simple entry patterns. And again, we want to buy as low as we can. Because if I simply try to buy in stops up here, right? If I buy here above that high, right? If I buy right there, again, I'm putting myself in a very bad position here to get trapped, right? It needs to be a bull trap above that high, right? So I want to be in as low as I can with that trap entry. That way, by the time we do end up running into some sellers, you're already getting that first profit target. You've already got that stop. Move up to point of entry. So as we go lower, the crown reversal is definitely my favorite to pick a bottom in a bear market, again, because it avoids that potential for that bear trap. We oftentimes see stuff like this too, where it may go up, roll over. The bears may come down. They may hold that pullback and retest that low. Now, in that situation, now you don't need to be as conservative, right, on the entry. You don't need to be as patient on it. Now the bears already got in. Right? They already got what they wanted. Now they've taken their profit at that low. The only people now selling down here are going to be rookies, and we can now use one of those 2-try failures to punch this thing back up into that trading range. I hope that makes sense, right? So if we retest the low, we can now be a lot more aggressive because now the bears already got their money out of the market. These are assumed to be just simply rookie traders down here, small stops, not able to protect themselves with big capital accounts, right? Again, on the way down though, before they retest, this is where you want to get that crown reversal because the bears are still hunting for that retest of that low. Hopefully that makes sense. And those are 2 ways to buy it as we go up off that low. How do we sell it as we go lower? Well, just like I talked about, remember going higher here, how do the buyers get a breakout? The buyers have to pop this thing up, they have to hold this pullback, and they have to what? They have to jump, right? Or they have to pop up and kind of flutter, right? And grind up. Those are the only 2 ways, well, not the only 2 ways, but the 2 most common ways that we may see a breakout. So if we end up running back to that low, and again, we're not going to sell into that low, but if they hold that pullback and they really jump, right, convincingly jump through those lows like this, that's a breakout, right? And again, we're overall bearish already. Now the key is don't chase the market going lower. If they hold and jump off that moving average, if they hold and jump through those prior lows, now we assume we're probably going into a measured move of some sorts, and now we go out, find that new channel off the low, draw off that high, and start marking off those prior swings. And again, looking for those first tests off the high of that channel, right? That's usually the most common way we'll see a breakout. It may also roll lower and begin to grind down, right? Again, grinders are very common as well. Once they grind down, then we start looking for that channel off the low, up off that high. And oftentimes in these scenarios, what will happen is we'll end up using the underbelly of that trading range, right, for a trap setup of a prior high, get above the moving average for a buyer failure. Again, use stops as fuel, traps, failures, pullback combos as we go lower. The next big objective you can see here on the chart right now is that 12,012. That'd be a really good target on the breakouts going lower. And of course, we also have that big low at 11,832.50. That really is kind of the wet dream target for the bears here at some point this week. That'll be a full reversal off of last Thursday's low there. So those are the ways I'm going to buy it. Those are the ways we'll sell it as we go lower. And again, buyers getting a great shot here right now for a potential breakout going higher here. Only time will tell. Nasdaq's ready. S&P is ready. You guys have a good game plan to make some money on the E-minis tomorrow. Let's finish things up tonight on the crude oil. Crude is bearish right now overall and the short term with a pop and grind channel. These pop and grind channels are very, very common or very reliable as well. They pop down, they grind. We've talked a lot about these already in the video tonight. So pop and grind channels are very, very common. I would expect this one to potentially have a bit of a deeper pullback than normal because we're sitting right on this major low right now. I've also, of course, you can see marked up what I call a measured pullback, the amount we went higher before. Oftentimes you'll see these marked up on my charts quite a bit here on these videos, but that's definitely going to be this area right there is definitely something on my radar right now on oil. So we are bearish into a pop and grind channel. That tells me, anytime we see these kind of pops and grinds down, we want to get up, short this thing, back down to retest the low. Once we retest the low, then we start thinking about reversals, right? Those double bottom reversals, as I mentioned before, trap those bears in and back up again. These oftentimes will create one big trading range. So let's kind of talk about this. Let's kind of unpack this a bit here on the oil. The most important thing that you want to kind of keep in mind on this is the size of this pullback. It's very bearish right now. I got a couple levels I'm watching here up overhead. If we simply get kind of a lazy pullback, it's not that difficult to think that buyers may come in. Buyers will try to come in, try to buy that pullback. We can use their stops as gasoline, if you will, for that failure into pullback combination, right? That's kind of the simplest way to look at it. Target, of course, is back down to retest the low. We see a lot of examples of these failure pullback combos in our free trading course. I'm sure most of you guys recognize that from that video series. So we definitely could be looking for that. Now, what I want to bring to your attention though is because of that potential larger pullback, if it really jumps, right? You could easily see this going up around that 78, 68 area because of that measured pullback that I mentioned there before. If it really, really jumps, now we have to deal with what? With momentum. Momentum now becomes a bigger issue here. And so now we want to do is we still want to be a seller because at this point now it's not a reversal yet, right? They haven't held the pullback and jumped. If they did, that would be a reversal, right? Or if they begin to grind going higher, that would be a reversal. But at this point though, it's simply nothing more than a deep pullback, a sharp correction, a retracement, if you will, in this bear market. So again, because of all that momentum strength and because of the likelihood anytime we see a strong move in one direction, getting another leg, we want to give the buyers the benefit of the doubt, let them try a couple times, and then use their stops as a catalyst, right? Use it as fuel for that run back down again. Much easier to time the perfect entry on this when you're getting short, when the buyers are also getting short because they're getting stopped out of their pretty aggressive long trade there. Once those buyers get stopped out, market now runs lower, and now momentum turns over. Now everybody knows where the market wants to go, and now it's a matter of finding that new channel off the low, the trend line off the low, the channel off the high, and then again, looking left, and then planning the entry, and we'll of course do more of this tomorrow in the trade room, but planning the entry off the high of that channel, right? Could be a bull trap, like I'm showing in this one. It could be a buyer failure. It could be a pullback combination. It could be a strength trade, right? Coming off of that channel high. Any of the entry patterns we get will work on that. At that point now, we can be a lot more aggressive because now that momentum now has turned over. So we trap in the buyers, use their stops as the catalyst to turn this thing over, and then again grab that first test off the high of that channel. And again, right, if they do end up punching it going higher here, if they hold that pullback and we jump and really convincingly blast off that moving average, okay, Now it's changed. Now we're a bull market now. Now we mark off that high. We find that low. And whatever we do, we don't miss that first test, right? It's one of the easiest trades you're going to find. Again, we're not going to buy the first pullback. That's always one of the more kind of questions I get on this YouTube channel, right? Can I buy, you can't buy the first pullback because, again, we're too bearish at that point. That momentum is simply too strong. But if they can hold that pullback, and believe me, I hate to let those things go without me too, right? Nobody likes missing a move in the market, but this is probably a 35% winner. This is more of an 85% winner. I have to get in the habit of avoiding those 35% winners so I can stay patient and have my bullets ready, keep my powder dry for those 85% winners. That makes sense, right? You want to avoid those low probability trades. That will give you the mental, the mindset to be ready for it and the capital to trade those higher percentage trades when they come a little bit later on down the road. And again, if we were to pop up and grind, right, same idea. Find that pop and grind, right, and buy that channel low off that low as well. If we do go lower, I'm not opposed to a crown reversal. I'm definitely not opposed to a crown reversal. We're sitting at major support here. If we were to get the bears coming in, the sellers coming in, and give them one try, give them two tries, I'm not opposed to a crown reversal. It has to be a crown reversal though, because again, it is so bearish out there. But with a big trend line down here, right? Big trend line down here with a major low right here. There's nothing wrong there. We're looking for a reversal off the low, but make sure you buy as low as you possibly can, right? Because again, there's no telling here as it goes higher, right? This could easily be, again, kind of a larger channel up here. It may get picked off up at these highs here. So you want to make sure you're buying as low as you can before we get that retest. If we were to go up, back down again, right? Then take out that low. Okay, now it's a different story, right? Now the sellers are already in. They're already getting paid, right? They're all fat and happy now. Now, as the rookies come in now we can get a lot more aggressive. Bears try once, bears try twice. These double bottom reversals, you could always be a lot more aggressive now because now we know where the bears are, right? We know the bears are waiting up here, okay? That makes sense, right? If I try to buy it too aggressively here, I'm oftentimes walking into a trap right there, right? But once I retest that low, then I know where the bears are, right? Then I know the bears now are where? They're right there, right? I have that little bit of open space right there to profit from. Okay, it's kind of a gimme, it's kind of a freebie for the buyers. Okay, once we get that rip running higher, then we can look for a potential breakout from there. 1, 2, 3 breakout, pop and grind breakout, etc., etc. So it's much easier if we do go up, get that short back down, retest the low. Then we know the bears are way up here. And so now we can be a lot more aggressive here, trapping in the bears, using stops as fuel. Oftentimes these things will really give us that 2-try failure into that pullback combo, and then up we go from there, right? That'd be a great way to buy that double bottom. Again, we're overall bearish, so use those sellers, use their stops as the catalyst you need to get this thing pumping higher on you, and then once it does, find that channel and grab that channel. Again, you want the entry off that channel before you go back up and retest those highs. So we'll know more about this tomorrow, obviously, but that's the way you want to short it on the bounce and buy it on that double bottom. It's pretty easy once you learn the technique on it. And of course, tomorrow we'll do it more and more together in our trade room, opening up at 8 o'clock Eastern time. All right, guys, once again, don't forget that 10 o'clock news for tomorrow. We got Michael Barr tomorrow at 10 o'clock. Don't forget, no newsletter next week, unfortunately. I hate to leave you guys hanging, but it's that time of the quarter again. In the meantime, we'll wrap things up here for tonight. Have a fantastic day tomorrow. Hopefully I'll see you tomorrow morning trading with us in our morning trade room, 8 o'clock Eastern time. And don't forget, if you have any questions or if you want to get any access to our trade room, our free trading course, or any of the additional resources I've talked about tonight, grab the links in the description of the YouTube video. While you're down there, hit that like button. Make sure you give me subscribe. Set those notifications so you don't miss tomorrow night's video upload. And if you need any help along the way, don't be afraid to call the office or use live chat as well. All right, guys, I'm going to wrap things up for now. Hope you learned a bunch. Hope you used the knowledge to earn a bunch tomorrow. And I'll see you guys same time, same place tomorrow night. As always, my name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.